Hi, everybody. Can you hear me?
Yep.
Hello. Hello, Terry?
Yep,
Hello?
I can hear you.
Hi, welcome to class. How are you?
Good, and you?
Good, 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 good. All right, we'll get started. You know that this is an online class we'll hold every Wednesday. If for some reason you can't make it, you could watch it, and you know how it works, right? Then you just put the code word in, and you get credit for it. Are you aware of that?
Yep.
Okay, great, 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 great. Okay, good. So let's get any questions on anything so far?
Not for me.
All right, let's get started then. All right, so I'm going to share my screen, and this is basically like many of our courses here. It's going to be a 6-week course, and I mean it's a 6-week course. And let's get this open. So everybody see my screen?
Yep.
Okay, you guys can mute yourself now, but feel free to come on anytime. So this is the basic setup from my standpoint, but you should be able to see the same things. And each week you're going to be working on your course project until we come to the final week. It's due in week 5. And of course, there'll be discussions every week, which I expect you to participate in. So, because that really gives us the feel of being in a synchronous class where we can kind of exchange ideas. My name is Professor Strafacci. I've been working at Rasmussen for a while. I've been teaching for the last 11 years. I'm not that young a guy. I'm in my 60s, but I was also in finance for 30 years. So I did just about everything you could do in finance, you know, trading, investment banking. I still do work with an old Wall Street family and do some consulting. A lot of modeling. My main areas of expertise are in arbitrage, bond trading, options trading. So that would be like where I really specialized. But I've also dabbled, you know, and I've been involved in investment banking and different things. And mostly the consulting we do today is financing and, you know, retooling businesses and helping smaller family businesses retool. But, you know, we'll take anything that comes our way. And we also are exploring some ideas in the arbitrage format with commodity trading and things like that. So that's my background. St. John's University in New York. I have undergraduate degrees in accounting and economics, and I have a graduate degree in finance, and I'm just completing my doctoral studies in finance at Pace University in New York. So, you know, that's my background. Married for many years happily, thank God, and, you know, 3 sons, all at various levels of higher education. One son has a PhD in design, you know, bridge design. And my middle guy is a lawyer and an engineer, and my little guy works for the Securities and Exchange Commission. So, you know, we're educated, and they all have their MBAs. So that we were educated oriented, and I prize education, and that's why I got involved in the education game. So at this stage of my life, this is what I want to do, and it gives me a lot of happiness to be able to use whatever knowledge I have to help other people, you know. So it's been good, and I'll enjoy doing it. Any questions? Maybe Terry, Amy, just come on and tell me a little, give me a little bit about yourself, or you want me to just get started? That's totally up to you. Just get started, or do you want? Excuse me?
I'm good with just getting started.
Okay, good. Okay, and you can hear, am I clear? Could you hear everything?
Yep, everything's clear.
Right. Terrific, thank you. All right, so let's go through what we have to do. Every week you're gonna have, you know, a discussion, which really is really important. I'm gonna call that up for a minute. Let's call up our discussion first. So really important that, you know, you participate. There's our discussion. And in this case, you're the CFO of a mid-sized company. You've been tasked with identifying the areas where your company is exposed to risk. You need to mitigate risk. What approach would you take? And explain the risk management process. So if you looked at my initial post, and Terry, I see you already. I see you guys have already added to it. It's all about how risk management works, right? And most of the risk management we want to look at would be standard deviation, right? That's one of the ways we could look at risk. And what is standard deviation? Value at risk, right? It's to quantify how large a loss on investment could be given with a given level of confidence. So take a look at this. So let's go over that for me, because this is an important part of what you're going to be doing. All right, I want to go through this real carefully. I'm going to copy that. I just want to put it in a separate file for me. Just make it easy to look at. Let's spend some time with this now. Bear with me for a minute. So what is risk management? All right. And reason why I want to go over this carefully, and then maybe we'll together we'll look over some of these discussions, is because if we look at our first, all right, that's our first discussion. But if we look at our first set of what we need to do in this first week, you're going to see that you're going to have to do a course project outline. So you're acting as an outside consultant to Gentry Inc. It's a fictitious company, and have been hired to help the company with the IPO on the primary market so it can expand internationally. Be sure to review the course project introduction before you start this project. Recall that Gentry is a fictional firm, so you will not find any public information on it. Your analysis should be based on the lecture materials and other resources available. Now, one of the resources available that you'll see in the course instructional materials would be your information from the bookshelf. And this is the text, the actual text. I took one page out of the text that I want to cover, but this is the actual text. Okay. So you want to definitely be reading what you need to read in the text. Okay, create an outline with all of the items that need to be addressed for you to complete the client engagement. The final page of your outline should be an APA references page. Include your initial plans for growth strategies, capital structure, and risk identification, which is covered in subsequent projects, weeks of the project. Now remember, cap structure. What is cap structure? Cap structure is the mixture of equity and debt that you would use to finance a company. Remember, you could only finance a company two ways, by either taking on partners, which is equity, or borrowing money, which is debt. So cap structure is going to be important, as well as growth strategies. And how you arrange your cap structure is very important. There's a whole area, a huge area in financial theory that talks about the difference between equity and debt. For instance, if you go out to try to sell equity, which is taking in partners, the markets might look at it two ways. They may look at it like this is a chance to invest in a good company. They may also look at it like, hey, if this was such a good company, why do they need partners? So you could send mixed signals sometimes, depending on what kind of company you are. Obviously, if you're a well-known company like McDonald's or IBM, it's easy to sell equity because nobody suspects that you're not doing well. But if you're a smaller company that people don't know enough about, selling equity might send out a signal that you're desperate for partners. So that's where the equity debt mixture it's more than just original financial theory said, well, it doesn't matter. If I have equity or debt, it really doesn't matter. What really matters are my cash flows. But subsequent theories have told us that does matter. Because remember, one of the things we know about debt is we can deduct debt, a company could deduct debt from their earnings. It's called a tax shield. Hopefully you learned that in some previous classes. So there is a benefit to debt. So all things being equal, you would rather use debt than equity because you get a tax deduction up to a certain point, obviously. Like we all know, if I use all my deductions and I have no income, that deduction isn't worth anything to me. But let's assume that the deduction is worth something to me as a company, and I can still take down my revenue tax burden. Well, at one point, what's the negative if I put on too much debt, even though it's a good thing? You guys want to try with an answer? Anybody? You want to take a shot? Terry, Amy, I know it's only two of you. I don't mean to pick on you, but do you guys have any thought on why we wouldn't want to put too much debt on, even though we can deduct? It's like a mortgage. You could deduct your mortgage, but why do you not want to take on too much mortgage? Go ahead.
We want to make sure that you have sufficient cash flow.
There you go. Excellent. Excellent, Terry. Right. You don't want to bring on so much debt, which is another problem, where the markets start to think that you are a risky company because you have too much debt burden. So there's a lot, it conflicts, Debt is good to a certain point, but at one point we get what we call business disruption costs, where people start to worry if you can pay your bills. Basically, long story short. Good, excellent. So that's cap structure. You're going to learn more as we move about. And risk identification, we're going to talk about this morning. And then you got to figure out things like how to expand, what the history is, growth strategies. And you can submit your completed assignment using these directions and using that format in APA. So that's the big plan. That's just part of your project. This is the stuff you want to focus on. You also want to, well, you guys are good, but I'm going to give a code word out, and you have to use that code word to complete the live classroom. And then we'll talk about the regulatory environment and adverse selection in a minute. What else did I want to go over? One of the things is when you go to course materials, there's your textbook. There's a course chat if you have any questions. And you can always email me and text me. By the way, I should mention that at 917. Well, I don't want to give my number out because I'm going to use this as a tape. But you have my number you have my phone number in all the text and in all of the messages. And if you need it, just let me know. So there's the e-text. Because I like to post this stuff on a private YouTube, so this way you guys always have access even beyond this, if you want to go back to it one day. So that's your tool. Now, if you go to books and tools, and this is really important, always use the calendar and follow the calendar. There's your syllabus. I'm going to call that up in a minute. And if you hit your resources. And I want everybody to pay attention to this. Hello, David. Welcome, David. Okay, I love it. I like the background. Nice to meet you. Okay, there's e-resources. There's a academic. This is a great resource. The academic. You can search for academic articles. There's your APA guide if you need it. So don't be afraid to use it, because this thing is an APA. So there's all your APA stuff. I mean, Rasmussen does a really good job here. I have to give them credit. Give you a lot of good stuff to work with. There's a academic writer. There's Grammarly to check your grammar. Please check your grammar. And here are all guides by subject and topic. And this is really good because you could search for academic articles using EBSCO or ProQuest. So hopefully you're familiar with that, but you have the tutoring platform if you're not. Okay, so make use of all the materials. They're there for your use. And also to give you the transferable skills, because once you learn how to do a project, think about why we give you this. Once you learn how to do this project here in-house, you could take those skills and use it in the actual business world and profit from it. So that's why we do that. That's why we put this together, okay? Any questions? Any questions? Okay, good. So really just follow we'll be meeting every week, but just follow what you need to do, and I'll be giving you feedback, obviously, and keep going through this course project. Let's take a look at the syllabus. And once again, where do we find our syllabus? Go to books and tools, and the syllabus is right here. Okay, and there's all my information up there. Now, one of the things I want to point out is my YouTube channel. There's a lot of information on my YouTube channel. This is my finance playlist. There's an economics playlist. There's a statistics playlist. And in the statistics playlist, you're going to see a lot of information on standard deviation, which I'm going to talk to you about in a few minutes. Standard deviation is a great way to look at risk. Here's part one, here's part two. I have 5 parts on standard deviation, and it gives us a great way to look at variance. What standard deviation does is we could take a number of returns of a company or any kind of statistic and see how much variance there is. So I'll get into it in a minute because I want to save that for when we talk. But here are all tutorials on different things you're going to be able to use in this class. Even how to use Yahoo Finance to find things. So that's my Finance Academy, and I have that bookmarked in the course shell, of course. If you can't find it, let me know. And then there's Accounting Academy, which I have an interactive spreadsheet I could send to you, and these are all ways to look at financial statements, budgeting techniques, and then, of course, there's Statistics Academy and Economics Academy. So I've got a lot of stuff. And these classes I'm going to be putting under the Rasmussen stuff, so you can go pull them up whenever you want. Previous classes that I've done are here. Good. Any questions out there? Any questions? If one person could just say no, I can move on. I would appreciate it.
No questions.
Okay, great. All right, so that really is a full look at what you need to do. Let's look at this syllabus for a minute. There are your competencies. You want to assess the role of asymmetric information in the financial markets. What's asymmetric information? The idea that companies know more about the company than the investors, and the investors will require higher rates of return because they're not sure they're getting all the information. That's asymmetric information. What's the role of financial securities in a growth strategy? Do I use debt or equity? And how do I use it? How do I sell equity? What debt should I use? Should I borrow long? Should I borrow short? Construct a framework for acquiring, investing, and managing capital. Again, what company should I use to raise capital? Where should I raise this capital? What market should I use? Who should be my target investors? Interpret quantitative methodologies. Of course, if I'm going to sell debt or I'm going to use equity, how do I price this stuff? What's the right rate of return? How do I know I'm not giving too much of the company up? Examine financial data to evaluate financial assets effectively and perform valuation analysis. So these are all things we're gonna want to cover in this course. There's your library resource. Make use of it. Course requirements are you have to complete all lesson applications, you got to participate in weekly discussions, and you got to check the course announcements, which I will be doing. Online discussions will be we'll explore the topic of study each week. Often we will go beyond what the text has to say in the subject and collaborate to brainstorm on new perspectives. For each week module that contains a discussion forum, you'll expect it to post a thoughtful, detailed response. A yes, no, or I disagree is not sufficient. You should check back in a while and see what your classmates have posted. Finding a post that interests you and craft a substantial reply in the discussion format. Please check the course. Remember to exercise courtesy and proper etiquette. I'm going to copy that for a minute. I want to put that in the course. Documentation style, different academic and professional disciplines use various methods for citing sources. This is done so the ideas are properly attributed to their author and so that authors can easily find and refer to the information to help with their study. To ensure consistency and precision for students, the university has chosen APA style. Where do you find the APA style? In the course resources. There's videos and how to employ it. This is just a great resource. All right. So hopefully most of you are familiar with APA style, but it's all here for you if you need it. Really good stuff. They really do a good job, I got to say. Not because I'm a cheerleader, but I really do. The school just does a real good job with this stuff. Okay. Additional course requirements, check your course schedule for additional readings. Obviously, a couple of things I want to talk about in terms of additional and assignments, and the written assignments should be, you will be practicing calculations, and that's your course project. So that's what you need to do. How does it break down? By category, discussions are 300 points at 24% of your grade, about 24. Assignments are 30% of your grade. Course project is 40% of your grade. So really pay attention to this course project and reach out to me for help. And if you want to, from time to time, show me like a draft, I'm more than willing to look at it. Live classroom is 5% of your grade, but you have to definitely check in because I'm going to give you a lot of information, and that's how you get your total points. And this is the grading scheme. 93% and above is an A, 92 to 90 is an A minus. You could read this yourself. I'll respond to all course messages. I gave you my contact information. I'm conducting these live classrooms, participating in the discussions, and I'll grade everything by Friday at midnight after the assignment due date. Usually I try to get it done by that Monday or Tuesday. I don't like to sit on grade. Just better for me, better for you. This way, my feeling is if sometimes you put something off and you forget to do it. I mean, I got a lot of stuff going on like everybody else. So I like to get the grading done right away. If I grade something and it looks like you didn't get full credit at any point in time, do not hesitate to contact me. It hasn't happened very often, but sometimes it happens. Sometimes you might have submitted something and I deducted a point and you said, well, wait a minute, professor, I answered that question, or I submitted that. Like I know in some classes, I teach online in a few other places, and you might have to be on, like you might have to do 2 or 3 discussions to get full participation credit. And sometimes people do the 3 and I don't see that, or there's a glitch in the system and I only give them less than the full amount and they tell me and I look and they get their credit. I will never, if I'm going to make a mistake, it's, I'm a human being, but I never want to penalize a student for no good reason. And if you need extra time on something, what's most important is you let me know, because things happen and I get that. But you have to let me know. Just stay in communication. I know this is a pretty big class, so you need to stay in communication. By the way, the code word today is baseball. Code word today is baseball. Baseball, my favorite sport. I'm a Met fan, long-suffering Met fan. I don't like the Yankees because when you grow up in New York, you either like the Mets or you like the Yankees. You don't like both. I'm kidding around. I'm sure there are people who like both, but I'm a Met, long-suffering Met fan. So love the game, enjoy it. I mean, actually, I'm 62. A long time ago, I played basketball and soccer. That was my sports in school. But I'm a big baseball fan. That's my favorite sport to watch. And golf. I have family in golf. I have a cousin now with the same last name who's playing on the Pro Tour. He just got on the Pro Tour. His grandfather was U.S. amateur champ, Tyler Strafacci. So we're kind of rooting for him. His grandfather, Frank, who was my great uncle, he was a U.S. amateur champ in 1932. So we have a lot of sports in our back. All right, transferable skills. Here they are. We want to make sure that you get the skills that you can take into the workplace. And our attendance policy is to be on time. Obviously we're not in-house, so you have to log in. Okay? You have to log in. Or you have to listen to these things and give me the code word baseball again. If you're not checking in 14 days, you can be administratively withdrawn. So you don't want to run into that. And there's no reason to. You want to stay on top of this stuff. You can submit assignment work 7 days after the stated deadline. I will not penalize you if I know ahead of time. I will waive that penalty. Okay? I'm really pro-student, obviously. I know that you're taking a lot of time and resources and you didn't sign up for this to fail. So there are times things happen. And definitely we're living in an extraordinary time during COVID. But I'm here to help you, not to hurt you. And incomplete, we can get into that. Hopefully we don't have to deal with that. You want to be done with this thing. And there's your academic integrity policy, most important. You don't want to cheat. No reason to cheat. And no reason to plagiarize. I always say to students, at one college I taught at, I was in charge of the final thesis that they had to write. And plagiarism is a big deal because if you get caught plagiarizing, some teachers, professors will pick up on it and hold someone back from graduating. I've seen that happen. I always say this. Think of plagiarizing like this. There's no reason for it. Better to get a lower grade and cite all your sources than to plagiarize and make it look like it's not your own work. So I'm talking to you like almost like a father, right? It's like if you're of drinking age, right? Let's say you are. First of all, you shouldn't be drinking that much. I'm going to talk like an Italian father. But think about it this way. You go out, you have a couple of drinks with your friends, you're of legal age, you have every right, nothing too much. You should not get in a car and drive. Call somebody. It's an easy thing. What's the worst case? Or get an Uber. What's the worst case? You call somebody and they get annoyed with you. Better to get than getting in a car and have to face what could happen and put yourself in danger and other people in danger. I kind of make an analogy to plagiarism because plagiarism is the kind of thing that could be avoided. Just say to the professor, look, this is what I wrote, and maybe I should have had more original thought, but this is the sites that I used, and a decent professor is going to say two things. Okay, it's enough. You did a good job. Or B, go back, elaborate a little more. But at least you didn't plagiarize. So just keep that in mind. There's no reason to get in trouble for plagiarism. And I believe, and I've talked to people who really know this stuff a lot more smarter than I am. People who have done like people like I've been very close to a couple of folks who have PhDs in English that I kind of run the library for that from that aspect. Because I used to take my classes to the library to learn about APA and citing references, and they all said the same thing to me. They all agree on the same thing. When a student plagiarizes, it's not because they're being dishonest. It's usually because they're up against a time deadline and they just got to get it done. So I believe that. I've seen it. I don't think students want to be dishonest. I've always given the benefit of the doubt. But if you see that the work is just piling up, that's when you got to talk to your teacher. Okay? Any questions? Okay, good. Okay, so having covered that, let's go back to the discussion for a minute. Let's go back to the discussion. And what I'm going to do is put this up here. So this way we have a little note on discussions. Okay. So let's talk about risk management for a minute, because that's an important subject. And I pulled this off of from Investopedia, which is a good site. You never want to use Wikipedia. And anything you do, you don't want to use Wikipedia. Why? Because Wikipedia is not verified. Oh, one thing I wanted to mention as you're doing your project, I've been reading the Wall Street Journal and the New York Times every day since I was a kid. Not since I was a kid, but to be perfectly honest, I'm from New York. Obviously, you can hear that from my accent. I went to the same schools that Dr. Fauci went. As a matter of fact, I grew up in a place called Diker Heights, which is right on the other side of the Verrazano Bridge. Very nice place, great place to grow up. Still a beautiful place. I'm grateful for that. And his family had a pharmacy that was right up the block. I lived on 83rd Street. Right up the block was my grandma's school, St. Bernadette. Right on up a couple of steps from there was the main, like where the stores were, where the current commercial district was. And there was a right across the street from the church was a pharmacy, and that was his family owned the pharmacy. So we went to the same schools. And the high school I went to was a great school. It was called Deviation High School in Brooklyn. And you took the first 2 years in your language. So you could pick Italian, Russian, French, or Spanish. I chose Italian. My family didn't, came to this country a long, long time ago, so they didn't speak Italian in the house or anything like that. But I figured it would be a good opportunity to learn Italian. And we had to take all our classes in the first 2 years in Italian, except for biology and math, and chemistry and math. So any of the other classes were all taken in your language. You learned them in the language, you translated them in English, you translated them back. And every class required a regents, which meant that you had to pass a state exam for every class you took. So it wasn't just like you passed the school's exams, you had to pass the state exams. So it was a really tough school, but it was a great foundation for me, and I'm very grateful for that education. And played sports and did all that other stuff. But the more important part is when you got to your junior year and your senior year, you can pick electives. Some students went into medicine or they got into the more sciences. I wanted to focus on business. My father and my sons are engineers, and my father was at a construction firm, but I felt this is what I want to do. I want to go into business. So they started giving us classes in economics. And that's when I got familiar with business and economics and accounting. And they gave us a copy of the Wall Street Journal, and we read it every day. And they asked us about it. And I've been getting it and reading. And then I worked on Wall Street. So I've been doing that since then, when I'm 62. So every day I check in. And I tell you, if you learn one thing from my class, it's the importance of reading the financial press every day. Because you're really going to learn and have opportunities to do well in life. You know, economically, financially, there's a lot of stuff here. So it's a $50. Here's how I look at it. As a student, you know, I don't want to spend your money, but it's a $50 every 6 month cost to a student to get the online journal and they could deliver it right to your doorstep. So wherever you are, it's a national paper. I can't recommend it highly enough. And I even get this thing called Market Watch, which gives me everything on the market. So you can get a lot of information. Then New York Times, something I've read for years. And then, of course, I get subscriptions to things like The Economist and everything else. So just be aware of that, how important this is. Okay. I see something on the chat. Okay, great. But, you know, just so where you guys, I guess I'm assuming, where are you guys calling in from? You could chat, you could put it in the chat. Just curious. So you can get the Wall Street Journal anywhere. New York Times, you can probably get anywhere anyway. It's a national paper, but definitely the Wall Street Journal. Okay, let's see. Oh, Fargo. Wow. Excellent. Chicago, but currently, okay, Amy. Good. Minnesota, excellent. All right. Twin fan? Assuming you're a Twin fan. Okay. I like the Twins. That Buxton is doing great this year. It's a good student. And the Vikes. They're great uniform on the Vikings. And David, you're currently in Spain. You're Chicago, so I'm assuming Cubbies or the White Sox. All right. Cubs. Good. I've been to Wrigley and I've been to I guess I don't know what they call it now. When I went, it was Cellular One Park. Whole family's been St. Louis Cardinals fan. I've been, well, like I said, my sons play baseball, so and I'm good friends with the Frazier brothers. I don't know if Todd Frazier is just kind of wrapping up his career. But yeah, Wrigley. I've been to Chicago a number of times on business, but I definitely been to Wrigley, and I did go to Cellular. Well, they called it Cellular One back then. But I've been to the old Bush, right when I've been to the old Bush Stadium, and we took my family. We were on a family trip, right when they were building the new Bush. Great experience. As a matter of fact, when we got in, it was like we drove in. We had just seen the game. We were coming up from Cincinnati, and we saw a game in Cincinnati, and we went to the office to get our tickets, and the woman there gave us all this like Cardinal stuff, but she appreciated that we came from out of town to see the game, which I thought was great. Fargo, never been up that far. Been as far as, let's see, I've been to South Dakota. Been to South Dakota. Been to Mount Rushmore. And we've been to the Crazy Horse Monument, and then we traveled across Wyoming to Custer, and then we stayed in Jackson. So we never got to North Dakota, but I'm great to have you here, and great to have you as part of the class. And the only thing I know about Fargo was the movie, which I enjoyed very much, but it looked like a nice bunch of folks up there. So good. It's great to have you guys in class, and I appreciate that. Okay, Wrigley, yeah. And one thing I love when I used to go to Chicago, one of my favorite things, whenever I got to Chicago. Well, I'm partial to pizza from New York, obviously. Right? I like the Chicago pizza. I like the Chicago pizza. I'm not gonna say I don't. But this is what I'm partial to. Whenever I get into Chicago, I love a Chicago beef sandwich. I used to go to a place when I would do business, I'd go into the airport and they drive in and I get the same guy all the time because we use this car service. And the guy knew a place in Cicero that we used to get the sandwiches at. And that was so delicious. We make them at home now sometimes. I'll buy the Jardiniere and my wife will get a brisket, put it in the slow cooker, and then we add the Jardiniere. Let's see. I had a place I go to. Bear with me. Well, Portillo's, I know. This is it. This is it, yeah. Tony's Italian Beef. That's it. This is the place. Great stuff. I used to go on the way in from the airport. Man, I can go for one now. All right, so yeah, it was from Midway. That's right. It was from Midway. Definitely, David. Definitely. It was coming in from Midway. Absolutely. Not coming in from O'Hare. Gotta try it. Yeah, it looks good. It was really good. So yeah, I used to always ask the guy to stop. And Portillo's, I've been to. I took the kids there, my wife. So I like they have a restaurant in Lower Manhattan that serves, it's a Chicago based, it's a guy from Chicago. He does the deep dish pies and he does the beef, but it's just not the same. Even I've been to Orlando and they have I think it's Portillo's has a place down there. But again, you're not going to get it like you get it in Chicago. Then another place that I love and one of my favorite places of all time is show you. This is a great place. And then I'm going to get into Minnesota for a minute because I've been up there on business. Commerce. I love this place. They got the music playing outside. And I got to tell you, because you're in Chicago, it is absolutely the best veal chop I've ever had. And I'm Italian, so it's all about food for me. Unbelievable veal chop. Good stuff. So if you're on Rush Street, I love going to this place. And it's got a ton of, it's huge. It really is the kind of place you want to go to, like for a party or stuff like that. For really good, authentic food. And then in Minnesota, this is the place. I'm sure maybe you heard of it, my Minnesota friend, Annie Steakhouse. It's a great place. Yeah, it's been around. I've been around a long time. And this is one of the best steakhouses, I think, in the country. Manny's. Great martinis, great steaks, all the good stuff for you. So there's my, but I can't give you anything on North Dakota, but I can give you stuff on this place. All right, so a little fun here. All right, so let's go back. Let's cover the risk management. Let's look at risk management. So risk management occurs everywhere in the realm of finance. It occurs when an investor buys a U.S. Treasury bond, when a fund manager hedges his currency exposure with currency derivatives, and when a bank performs a credit check on an individual. Stockbrokers use financial instruments like options and futures, and money managers use strategies like portfolio diversification to mitigate risk. Right? So how do we mitigate risk? Huge topic, huge topic. Inadequate risk management can result in severe consequences. We know in the subprime mortgage meltdown, Lehman Brothers went out of business, and these were companies I know, and they were around forever. Bear Stearns went out of business. Merrill Lynch effectively had to be bought over for pennies on the dollar. And these were companies that were giants, but they didn't manage their risk. They miscalculated their risk. We tend to think of risk in predominantly negative terms. However, in the investment world, risk is necessary and separable from desired performance. Great point. You have to take risk to make return. There's just no way around it. Because if you take no risk, what you're going to get is the risk-free return. The risk-free return is basically the 10-year Treasury return. So if you're asking me what's the risk-free return, Professor, I'm going to point you to the Wall Street Journal, the 10-year yield, and I'm going to say, well, if you took no risk, generally speaking, you're going to earn a return of 1.6%, because that's where the government borrows money. And the government is considered the safest investment dollar. We have the military, we have the Federal Reserve, we're a very secure country. Foreign investors are always willing to put money into the dollar because they know that it's protected. And more importantly, right, foreign investors invest in us. And more importantly, the dollar is the reserve currency for oil, for gold. It's considered, anywhere you go in the world, anywhere you ever traveled, and, I've done a fair amount of traveling, people will always accept the dollar because it's risk-free. They feel that the dollar will still be the dollar tomorrow. They'll still have value, and they're not going to worry about, God forbid, a coup or someone taking over our country. Of all the risks in different countries, the US is the safest, considered the safest. So if you have no risk, that's what you're earning. But you have to take risk to earn return. And that's why risk is necessary. Okay, that's why risk is necessary. A common definition of investment risk is deviation from an expected outcome. Now, again, watch my videos on standard deviation. We can express this deviation in absolute returns. So it's the average return. When the deviation may be positive or negative, investment professionals generally accept the idea that such deviation implies some degree of intended outcome from your investment. Thus, to achieve higher returns, one expects to accept greater risk. It's also a generally accepted idea that increased risk comes in the form of increased volatility. While investment professionals constantly seek and occasionally find ways to reduce volatility, there's no clear agreement on how it's done. So in other words, I've got to take on more volatility to get more return. How much volatility an investor should accept depends entirely on the individual's tolerance for risk. Everyone has different tolerance for risk. You get less return for risk. Or in the case of an investment professional, how much tolerance for their investment objectives will allow. One of the most commonly used absolute risk metrics is standard deviation. It's a statistical measure of dispersion around a central tendency. You look at the average return of an investment and find its average standard deviation over the same time period. Normal distributions dictate that the expected return is likely to be one standard deviation from 67% of the time, two standard deviations from the average, and that's how we determine risk. Again, watch my videos. But what does that look like? The normal distribution looks like this. So this is not a stats class. Hopefully you have some statistical background, but that's what a normal distribution looks like. And what we do is we look at our average return, which is mu. So let's say I have an investment that on average over the last 5 years has returned 10%. Then we looked at the variations of the returns. And that's our standard deviation. If the standard deviation was 3%, then we know within one standard deviation, 10% plus 3, which is 13%, and minus 3, which is 7%, those returns should, if the historical relationships hold, those returns should come back to 68% of the time. And within two standard deviations, that should account for 95%. And that's how we measure risk. The higher the deviation, the more risk we're going to have because our returns can vary even greater. Okay? Any questions on what I just did? Any questions? Any questions, guys? Could someone just answer me or write it in the chat? Any questions? Anybody want to write it in the chat?
No
Hello?
questions.
Okay, great. So let's look at it from another, let's finish this on risk, okay? Remember, baseball is the key word today. Okay. So here's an example. During a 15-year period from August 1st to July 31st, 2007, so this would be about 15 years, the annualized return on the S&P was 10.7%. So that's what you would have earned every year if you invested in the S&P. The number reveals what happened for the whole period, but it doesn't say what happens along the way. The standard deviation is 13.5%. This is the difference between the average and the real return at most given points. So when applying the bell curve model, any given outcome should fall within one standard deviation 67% of the time. So what we do is we take the 10.7% and we add and subtract 13.5%. So we know that within 10.7% plus 13.5%, which is about 24%, and minus 13.5%, which is minus 3%, that those returns should occur 67%. And if I go two standard deviations, it should occur 95%. So just using that math, I can know what my worst risk is and my best return. And if I could live with both, well, obviously I can live with profits. But if I can live with the downside, well, then I'll continue to invest that way. Because I could live with that. I can tolerate that risk. If I can't tolerate that risk, I have to find a safer investment. Assuming that my historical returns predict future. That's always going to be a caveat. Things change. That's one of the problems with what happened in 08. Lehman Brothers and Bear Stearns were relying on old pricing models for housing when the way people bought houses changed in this country. Right? They were using, yes, the price of houses always went up, but what they failed to realize was that the market for housing changed. While this information is helpful, it doesn't fully address investors' risk concerns. Okay? The field of behavioral finance has contributed an important element to the risk equation, demonstrating asymmetry between how people view gains and losses. In the language of prospect area, an area of behavioral finance, introduced by Amos Tversky and Daniel Kahneman. Kahneman is one of the geniuses of behavioral finance. Investors exhibit loss aversion. Kahneman documented that investors put roughly twice the weight in the pain of a loss than good. So what that means is psychologically, people will be more worried about having a loss than feeling good about getting a gain. And they will be more risk averse because of that, even though they shouldn't be. They don't want to be wrong, is basically it. Often what investors really want to know is just how much an asset deviates from its return. How bad things look way down on the left-hand tail, how bad it would be. Value at risk attempts to provide an answer. The idea behind value at risk is to quantify how large a loss on an investment could be within a given level of confidence over a defined period. For example, with a 95% level of confidence, the most you stand to lose on a $1,000 investment is $200. The confidence level is a probability statement based on the distribution curve. So going back to my distribution curve, if I know that the average return of my investment is 10% and the deviation is 2%, well, 10 minus 2 is one deviation, that would be 8. 8 minus 2 is 6%, that would be 95% of the time. I know that within a 95% probability, the worst thing that can happen to me is I'm up 6% on my investment. I could live with that. Let's say I look at another investment that returns 10%, but the deviation is 10%. Well, two deviations to the left-hand side would be minus 10%, right? 10 minus 10 is 0, 10 minus another 10 is minus 10. Well, I may not want to live with it. Remember, you want to get the most risk for the least amount of deviation. That's the holy grail of investing, to cut down your deviation and to get the most risk for required rates of return. Obviously, investments that are safer or less risky are going to have tighter tails, right? Most of the returns are going to be here, and the 3 standard deviations aren't going to be that far from the middle. Ones that are flatter are going to have more risk because you have bigger tails. That's why we call it a fat tail risk. Things like that awful stuff that happened on 9/11, Hurricane Sandy here in the Northeast. Those are called fat tail risks because we don't expect them, but when they happen, we didn't attach the right probability to them happening. They're just terrible events. Of course, measuring value at risk doesn't guarantee that 5% of the time will be much worse. Spectacular debacles like the one that hit long-term capital remind us of outlier events that may occur. In the case of long-term capital, the outlier event was the Russian government's default on outstanding sovereign debt, an event that threatened to bankrupt the hedge fund, which had highly leveraged positions worth over $1 trillion. If it had gone under, it could have collapsed the financial system. The U.S. government created a $3.65 billion loan fund to cover their losses, which enabled the firm to survive. So value at risk, while it's good, it doesn't guarantee that 5% of the time will be much worse. Yes, we know through Lehman and Bear and through Hurricane Sandy that the tails could sometimes get much worse. So even though these are statistics and we can put some degree of relevance on them, sometimes we have tails that are bigger than we thought. 9/11 is a great example. No one expected it. It was an event that was not planned for. Because it just was unfathomed. They can attack the Pentagon. They can attack the buildings in New York. But it was a risk that was obviously there. And if people had thought about them with the correct probability, and this is not to point fingers. I mean, this was just an extraordinary thing. But in the abstract, if these events had been predicted or more predictable or thought as more likely, obviously the government would have taken precautions and maybe, prevented anything that, like any of those events that happen. You can't prevent something like a hurricane, right? But you can prevent how you build those houses on the shore, right? So just, you want to think of risk that way. Statistical apparatus helps us to understand and calculate it. It doesn't prevent outliers from happening. Another risk measure oriented to behavioral tendency is drawdown, which refers to any period during which the asset's return is negative to the previous high mark. In measuring drawdown, we attempt to trust three things: the magnitude of the negative period, how bad it is, how long it will go on for, and how often. For example, in addition to wanting to know whether a mutual fund beat the S&P, we also want to know how comparatively risky it was. One measure is beta, known as market risk, based on the statistical property of covariance. So it's a stock's relationship to other stocks. We know that when we put a portfolio together, we can get out most of the unsystematic risk. In other words, if I buy Coca-Cola, the risk would be that people would be worried about drinking sugary drinks. Well, then I could buy a stock that makes a diabetes drug and mitigate the risk. If I buy an airline that has oil risk and energy risk, I can then go ahead and buy a oil company. I could take away eventually with enough covariance most of the risks in a portfolio. What I can't hedge out is the unsuspected systematic risk. COVID, this whole thing was out. You couldn't hedge it. You couldn't predict it. Sandy, you couldn't predict it. 9/11, couldn't predict it. Those risks are impossible to hedge out of the market. So it's the stock's relationship to those risks, which is beta. And we look at the regression, and again, if you want to dig deeper, going into my YouTube, you'll see that I do a whole thing on beta in the finance. So I do a whole thing on beta, how to calculate beta, different parts, okay? If you want to understand how to do it yourself. Beta helps us understand the concept of passive and active risk. We can look at the returns that are passive and active. Okay, we're coming up to an hour, so I want to start to wrap this up, but this is all in your this is all in your discussions. It's been great working with you guys this morning. If you have any questions, please talk to me, contact me, anything you need, I'm here for you. And yeah, that's basically it. Any questions before I end the class today? Baseball was the code word. Any questions? Okay, guys, I'll see you next week. And if I don't see you, or you can't make it for any good reason, just watch it and give me a call. I think you can submit more than once. If you have any issue with that, let me know. Let me know. Any other questions? Okay, guys, have a great day.